Tonight on Primetime Politics, rules ignored.
We found that organizations awarding the contracts showed a frequent disregard for federal contracting and procurement policies and guidance.
Canada's Auditor General digs into government contracts with consulting firm McKinsey and Company, finding a disregard of regulations and no proof of value for money on contracts worth $200 million. Coming up, we'll hear from the Auditor General herself, Karen Hogan. And will the Bank of Canada finally cut its interest rate? It's been holding steady at 5% for almost a year, and with a decision coming down tomorrow, we'll get predictions from two economists. This is Primetime Politics. Hello everyone, I'm Michael Serapio. The matter of government contracts were front and center in Ottawa today, sparked by one of three new reports from the Auditor General of Canada. One was on cybersecurity, another on Sustainable Development and Technology Canada, but it was the third report on government contracts given to consulting firm McKinsey and Company that really sparked debate. Karen Hogan finding that between 2011 and 2023, McKinsey secured contracts worth $200 million from Ottawa, but the majority did not follow all the rules, and there was no proof Ottawa got the results it paid money for.
We already knew that the Prime Minister liked to give tax dollars to his favorite consulting company, McKinsey, a company that helps supercharge drug overdose deaths as part of the opioid crisis. But today we learned from the Auditor General that it's far more money than thought. It was 200 million Canadian tax dollars for this one company. 90% of those contracts didn't follow government rules, 70% of them without a competitive process, 100% of them with the NDP voting in favor. Wow. Mr. Speaker, will the Prime Minister commit here and now no more money for McKinsey?
Obviously, the taxpayers deserve to get value for money, which is why we've continued to strengthen our oversight and the measures whereby public servants grant contracts, including to outside consultants. We've reduced those numbers. We're making sure that we're able to both grow the economy and fight climate change at the same time as we ensure value for money. And we will, of course, continue to work with the Auditor General and her recommendations as we move forward.
Okay, well, let's get out of the House of Commons right now and get into the report themselves, or reports rather themselves. We're now joined by Canada's Auditor General, Karen Hogan. Ms. Hogan, thank you for being here again.
Well, thank you for having me.
So listen, I do want to begin with your findings regarding McKinsey. We saw that debate in the House of Commons, but you say there was a frequent disregard for the contracting rules. What did that actually look like in real terms? What were you finding?
Mm-hmm. So it was complex when you think about the fact that we were able to bring in not only departments and agencies, but Crown corporations. So we looked at 97 contracts across 20 organizations, 10 Crowns and 10 departments and agencies, and recognizing that the Crowns have all their own rules that they follow on their own. But what we found is over the 12-year period in the audit that compliance with either the procurement rules or the ability of each organization to demonstrate that they had really generated the best value for money out of these contracts just varied. We found that 9 out of 10 departments had an issue with at least one contract. Most times it was more than one, and 8 out of 10 Crown corporations. So that's just a frequency that you shouldn't be seeing. It just means that there is this general presence where folks are not paying attention to the rules put in place to make sure that contracts are issued in a fair, transparent way and bringing the best value to Canadians.
Yeah, and when you talk about how contracts are given out, you also noted in your report that there was no open competition for these contracts. That would lead some to question whether or not there was perhaps ministerial involvement or perhaps bias in terms of awarding a contract. Did you see any evidence of that?
So there's a lot in that question there. I think we found that about 71% of the contracts that were issued were done in a non-competitive way, which is a high number when the default should really be to compete a contract to get the best value for money. When it came to non-competitive contracts, we found that the biggest issue was most often that organizations didn't justify why it needed to be a non-competitive contract and why choose McKinsey. What was it that was unique about their services that no one else could provide? When it comes to ministerial involvement, we actually didn't see any influence. We did see a minister involved in one contract, but it was done appropriately. When a contract is being issued on a non-competitive basis, there's a certain dollar threshold that the public service can authorize. So there was one contract that was over $4.5 million that was going to be issued in a non-competitive way. So the minister had to authorize it, and then Public Service and Procurement Canada and the department in question issued the contract as they were supposed to.
Okay, so that is what you found. Although what's interesting here is that there are rules that essentially govern federal contracting and procurement, rather. Are those rules failing? Are there gaps that need to be filled, given what you found here?
So I've been reflecting a lot on this based on recent reports and on this one about what is it about the procurement rules that are causing the behavior that we're seeing in the public service. Is it that the rules are so complex that people are trying to work around them in order to quickly issue contracts to meet their needs? Or is that there's so many rules that people just can't keep track of them all and are just not paying attention and accidentally not following them? I think the public service needs to figure out that root cause here, but for me it isn't about adding more rules at this point. It's about taking a step back, making sure everybody knows that the rules are there and following the existing rules.
Okay, perhaps not new rules, but what about increased penalties or some type of admonishment if for whatever reason the proper rules are not met?
So there's already mechanisms in place in the federal public service for that. Delegations of authorities can be taken away from individuals or organizations if you feel that they're not meeting the requirements of the standards. But I also think that what we need to see here is better oversight by each individual organization, whether it be a Crown corporation or a department or agency. You should have oversight in looking at the compliance of your procurement processes, because the rules are meant to ensure fairness, transparency, and best value for money, but they only work when those rules are being followed.
Okay, so that is what you found on McKinsey. Let's move on to some other issues here, because other reports that you issued, one being about cybersecurity, because another matter altogether in which you say the government does not have the capacity to fight cybercrime. How troubling is that? Where did you find the gaps?
So it's a concern here because I think it's confusing for Canadians. So an individual can report a potential cybercrime or an actual cybercrime to so many different organizations. The federal government needs this one stop where folks can just report and then it gets triaged behind the scenes. But what's happening now is we found thousands of reports going to organizations that couldn't handle them because it was outside their mandate. But more concerning is that they weren't getting back to the individual making these reports saying, you reported this to the wrong place, here's where you should go. Or the federal organization wasn't redirecting it, often citing lack of capacity and resources to handle the volume that they were receiving, or privacy reasons for not sharing it. So I think with a growing number of cyber crimes and their sophistication, it really is time now that the federal public service figure out how to fix this and do so quickly. Okay,
do so quickly with cybercrime. Let's also now touch upon Sustainable Development Technology Canada, because you raise an issue around that. But today we heard the Innovation Minister essentially announce that body, that organization, and funding for it is now going to be redirected to the National Research Council, essentially shutting down Sustainable Development Technology Canada. What do you make of that move?
So when we looked at the foundation, I would tell you that we found significant lapses in the governance and administration over public funds here. The board really failed at ensuring that they met their legal obligations and managed conflict of interests. So I heard about the announcement, and I have to say I was encouraged by the speed at which the government took some action. And now that this fund, which is meant to really spark innovation in the clean tech world, which is something we need as we try to combat climate change, I think now that it's in the public service, they'll be able to improve transparency and accountability on where the funds are going, how they're being used. And so I'm happy to see that the public service will have a bigger involvement in making sure that Canadians know how this fund is being used.
So long as they follow the rules.
As long as they follow the rules, absolutely.
Or else Karen Hogan's going to be on your case. Karen Hogan, thank you very much for the time. Always appreciate it.
Thanks, it was my pleasure.
Well, let's take a listen now to the reaction we got from government ministers to the AG's report.
I Over the last number of years, we have increased law enforcement's capacity to investigate and combat cybercrime. In 2020, we invested $137.5 million to establish the National Cybercrime Coordination Center, or like all good bureaucratic constructions, it requires an acronym, NC3. Our new National Cyber Security Strategy will outline a strengthened approach to protecting Canada's economic interests and critical infrastructure from cyber threats, and I look forward to releasing that very soon.
Now, following the allegations and the investigation we launched before the Auditor General, we had Raymond Chabot, Grant Thornton, we had McCarthy Tétrault, now we have the Auditor General. They all come to the same conclusion that there were a number of lapses in the governance and stewardship of public funds. So what we're saying is that now we propose a new model, which will have additional oversight and governance. We're going to move the activity to the National Research Council, and this has a number of benefits, one of which is that they're going to be subject to Treasury Board's rules in terms of how you manage public funds, also with respect to HR, and at the same time, it's going to allow us to restore funding to one of the critical sector in our economy. So it's a change of model which has additional oversight, allowing us to continue to support a critical sector in our country.
With the intention of constantly improving policies, procedures and processes to make them more rigorous, our government had already accepted the similar recommendations of previous studies and continues to implement strong measures to strengthen and streamline oversight and controls of federal government management practices in the area of procurement. PSPC has also instituted several changes and improvements, including introducing a mandatory requirement for all contracting authorities to retain all and any related information related to contractual decisions for professional services, and B, changing how the department administers non-competitive national master standing offers by ensuring classifications are on file and a challenge function occurs. I will also note that we have created a new position of Chief Contract Quality Assurance and Records Compliance Office. That action will ensure that critical elements of decision-making throughout the procurement process are properly documented, that guidelines and tools are put in place, and that quality is being actively monitored. Let me reiterate in conclusion that we're committed to protecting the integrity of procurement and expect public servants and all departments to operate at the highest standard and prioritize value for money for Canadians.
The federal government found itself responding today to a critical report from the National Security and Intelligence Committee of Parliament. NSICOP says Canada's spy agencies have information on foreign actors reaching out to Canadian politicians and some unnamed politicians willingly giving information to foreign actors after being elected. The Deputy Prime Minister, Chrystia Freeland, called the allegations concerning, but did not guarantee any Liberal MPs would be removed from caucus if found to be involved.
The guarantee I can give to Canadians is our government takes foreign interference very, very seriously. We have put in place tougher measures than existed under the previous Conservative government to fight foreign interference.
And when asked if Canadians have a right to know who these politicians are, well, take a listen now to what we heard from the Public Safety Minister, Dominic LeBlanc.
I think Canadians need to know that the national security and intelligence agencies are doing the important work that they do. I think Canadians understand that this work is done with a certain requirement of confidentiality and secrecy to protect sources and to protect the methods in which the intelligence agencies operate.
Liberals say they will conduct an internal follow-up on the allegations. The Bank of Canada will make its latest interest rate decision tomorrow. The rate has been holding steady at 5% for almost a year now, and since spring, inflation has been within the bank's target rate of 1 to 3%. But financial analysts are divided, some expecting a cut tomorrow, others thinking the Bank of Canada will hold steady. Well, to talk more about tomorrow's rate decision, we're now joined by Kaylie Tiessen, economist with this country's largest private sector union, Unifor, and Ted Mallett, who is the Conference Board of Canada's Director of Economic Forecasting. Hello to both of you.
Hi there.
Hello. So, Kaylie, I'm going to ask you to start us out here because we have heard Tiff Macklin say that possibly an interest rate cut would happen this month. Do you think it's actually going to happen?
I have two thoughts on that. The first is that I think the bank has been overly cautious all year and even longer. So, I'd put the probability of a rate cut actually around 50-50. But in my view, it's long past time actually to lower the rates. We've been in that 1 to 3% band already for the entire year. People are really feeling the pain of the interest rate being so high. Unemployment's high. The cost of investment is high, so I'd really say it's time to lower those rates.
Okay, you're at 50-50. Ted, what about you? When you look at the decision for tomorrow, what do you think will happen? Will it be a rate cut?
Well, the Canadian economy is ready for a rate cut. Whether it happens in June or July doesn't really matter that much. I think what is driving the decision is really the bank being concerned about where inflation is in the United States, and that we certainly don't want to get into a situation where Canada is diverging from conditions in the U.S. So our bet is, and we've been saying since September, that mid-2024 is when the rate cut is going to happen, and I think we caught that one correctly. So whether it's tomorrow or sometime in July, it's immaterial for the economy.
Okay, Ted, build on that a little bit, if you will. Dig into this debate that could be happening right now behind the bank's doors. You reference inflation in the United States. Talk to us a bit more, with more detail, if you will, about some of the reasons the bank might actually use to forego an interest rate cut for tomorrow.
Well, I mean, because conditions can change a lot. Over the past year, since we made the call that mid 2024 would be the time that rates come down, we made that call in September last year. Well, soon afterwards, people were concerned that rates would still have to go up, and there was really, high inflation really happening then. Well, then inflation in the U.S. cooled off tremendously in the late part of 2023, and then the expectation was that rates would start coming down in April, and maybe quite quickly. Well, turns out that inflation kind of reignited in the U.S. Somewhat. Not so much in Canada, and the expectation is that these things will shift around. So, the markets and the inflation numbers are kind of fickle. They do move around. We're looking for consistency in how prices move. So even 3 months to 3 months is not enough to get a sense of have we solved this inflation problem. And our view is that the bank would want to be reasonably comfortable that the U.S. rates would start coming down, not immediately. We don't think that U.S. rates are going to come down in June and July. But if they're pretty confident that U.S. rates would be able to come down in the early fall or late fall, then I think that the bank is able to make that movement now.
Mm-hmm. Kaylie, do you want to add to the conversation here? Because as we are hearing from Ted, of course, the two economies, Canada and the United States, very tied very closely together. We were always looking for conditions south of the border. What do you make of that argument?
Well, I think that if we look at where inflation has been this past year, we've seen that in Canada, we're firmly in that 1 to 3% band. Again, like I said, we have been all year. And if we're thinking about what the bank is talking about, I hope that they're talking about our own economy and looking at the strength or weakness of different measures. So we look at economic growth, and the economic growth we saw in the first quarter, it's just about 0.4%, which is not very strong, and continuing to have these high rates keeps that throttle on our economy at a time when we know unemployment is high, people are looking for jobs, people are looking for better jobs. There's lots of businesses who would like to be starting to invest. There's also this, housing crisis that we have, and we need to be investing in housing, building housing. Those high interest rates are really putting a throttle on that as well. I hope that the bank is talking about that as they're making this decision so that we can move forward on our other goals.
Okay, and so the implication is that there would be a negative economic impact then on the Canadian economy if the rates are not lower tomorrow. Is that what you're saying here, Kaylie?
I think that the longer the rates are held high, the longer then we have to wait to get going on these other things that we need to be doing, like building more housing. You know, we can think about the interest rate is one policy tool, but there are other public policy tools that need to be used in order to get going on building the economy that we need in the future and not just stuck in this problem that is clearly handled.
Ted, what do you say to that? Because, you know, I do have this question about whether or not there is a danger in foregoing a cut in June. What kind of impact would that actually have on Canadians and the economy here?
Well, I mean, I think the Canadian economy is ready for a rate cut. So we feel that June would take probably the highest likelihood, and that's what our official forecast is. Although we're going to be finishing our forecast after tomorrow, so if it's not June, it's most likely going to be July. I think it would be kind of damaging. It would be damaging for the Canadian economy to continue at rates this high. We're probably about 2.25% above what the neutral rate is, and that's considered the rate of interest that doesn't have a stimulative effect nor a contractionary effect on the economy. So even a quarter-point cut still means that rates are in the contractionary or the limiting territory, and so I think there is enough movement in at least slow movement in the economy to justify moving to a lower rate in Canada, and even stepping ahead of the U.S. But I still think that Ted Mallett and the Bank of Canada needs some sort of assurance that the U.S. is going to be moving relatively soon within the next few months.
You know, Kaylie, if the bank decides tomorrow not to actually drop interest rates in any way, shape, or form, what would you want to hear from Tiff Macklem, the Governor of the Bank of Canada? What do you actually want to hear in terms of a message from him if a rate cut is not his decision?
The Bank of Canada has actually already signaled that they are going to reduce rates. We just don't know when. What I want to see is this rate cut tomorrow, and that we don't wait. You know, Ted is saying as well that the economy is ready for this rate cut. You know, folks who are renewing their mortgages in the next little while would like to avoid the pain of that additional 0.25%. Some people might think that that's not a lot, but for many of us, it is an incredible amount. And the more we can see that rate coming down, the more people can start to plan with the certainty that it will continue.
Yeah, and I appreciate that, but if at the end of the day it's not a cut, but just a signal, another signal once again, the cuts are coming, what do you want to hear in terms of a justification from Tiff Macklem?
Honestly, I don't think that there is one. We're in a position where we're ready for a rate cut, and we just need to see it happen.
Ted, would it be enough to just signal that cuts are coming if one isn't imminent for tomorrow?
Well, I'm with Kaylie on this, and I think all the evidence is there for the cut. If it's not there tomorrow, then he'd pretty well have to signal that it has to be July. There's no really good reason to keep it on until September.
Now, if rates are cut, and you mentioned a figure there, Ted, it seems that the cuts eventually, now and in future, would be gradual. How much relief does that actually create for Canadians? What type of stimulus does that create for the economy? Ted, I'll ask you to start that one.
Well, I think what it means is that there's an assurance that we've turned the corner in this, and generally in the business sector, most business loans lending is done on a variable rate basis, so they pay based on what the current rates are. So if rates start to come down, it's a signal that people can start making those kind of investment decisions that ultimately mean for better production and better productivity and better outcomes down the road. The housing side is a little more complicated generally because the bank shouldn't be setting housing policy. I mean, that's the reason we're into a big mess in housing right now with high costs and high rates are largely because of bad policy at the metro, at the provincial and the federal level. So most of the repairs to that have to take place on the government side. The bank can only deal with these large elements of short-term interest rates as best they can, knowing that housing is connected to it, but it doesn't drive the whole economy.
And Kaylie, you know, that is an interesting point that, you know, how much relief would really be provided to Canadians if what we're talking about is a gradual cut tomorrow rather than getting back to a neutral rate as Ted was talking about?
I think that the relief will be palpable only because it's signaling that we've turned the corner. So in that way, I totally agree with Ted. There are completely different things that we need to do in order to deal with the housing crisis that's going on. But the relief will be palpable in terms of businesses starting to invest to create more jobs and folks planning for mortgages knowing that the interest rate is going to start to go down.
Okay. Well, of course, we're watching for tomorrow. And ahead of that, thank you both, Kaylie and Ted, for the time this evening. Appreciate it.
Thank you.
My pleasure. Thank you.
Well, time now for a look at what else happened in politics today. Ottawa's dealings with consulting firm McKinsey and Company came under close scrutiny today. The Auditor General of Canada finding contracts worth a total of $209 million going to the firm between 2011 and 2023. But often rules for their awarding were not followed and results or lack of results were not tracked.
We found that organizations awarding the contracts showed a frequent disregard for federal contracting and procurement policies and guidance. We also found that each organization's own practices often did not demonstrate value for money.
The McKinsey report was one of 3 released today by the AG's office. Another was on cybersecurity and a third on a government foundation that was quickly closed today after the audit's release. The Trudeau government is refusing to respond to comments made yesterday by the parliamentary budget officer. Appearing before the Finance Committee, Yves Giroux answered questions about the carbon tax. An earlier analysis from the PBO said most Canadian households would lose money under the regime. Giroux says he's been given the government's own analysis on the matter, but he's also been told not to speak about it. When asked why the government will not share their analysis publicly, here is what we heard from the finance minister.
Our government is absolutely confident that the price on pollution returns more money to the pockets of 8 out of 10 Canadians. It is, and that there's just kind of common sense to that.
But Giroux says the government's unpublished numbers would back up his conclusion. And finally, the CRTC has announced new rules forcing some foreign streaming giants to share its revenue. Under the new rules, streaming companies like Netflix and Spotify will be required to contribute 5% of its Canadian revenues to a fund. The CRTC says the measure will raise roughly $200 million a year, money, it says, that will go towards local and Indigenous broadcasting, as well as French and minority language programming. Unifor President Lana Payne applauded the new rules in a statement saying foreign streamers have been competing directly with Canadian broadcasters and they should have the same responsibilities and obligations to support local news and Canadian storytelling. And that is Primetime Politics for this Tuesday. I'm Michael Serapio. For everyone here at CPAC, thank you for watching. Primetime Politics is back tomorrow evening. Until then, take care.